and was talking about rolling options, right? I'm gonna pull up the SPY, something super liquid, and we're gonna talk about rolling options. Rolling option is just the process of taking a option and rolling it out further in time. You could either be doing that because maybe you have a loss and you don't want to lock the loss in because you want to give it more time, or it's a lot of different things you can do with options. You have options, right? Now, ideally, me, I like to roll if I'm selling an option, let's say I were to sell a 43-day um call right here. Let's say I sold the expected move, right? Picked up $352 right down here at the credit. I'll just lock it in. I'm gonna make it so I make the math easy. So call it 350. If and this is a 24 delta. Now, let's say 2 weeks go by and the market has moved. It moved against me. Let's take this. Let's just check this out. So instead of the market has moved against me and we are at clear that out. What hold on, what delta is that? I just want to make sure. All right, 24 delta. So now we're gonna move, let's say 3 weeks have gone by, or 1 week, 2 weeks, 3 weeks, and we right at 22 days. What I would do is come to that same delta. Now let's say the market is moving, now that delta that particular strike is um is right here. Or let's go to the 24 delta. Let's say it's right here. Right? So before it was 350, now a buck has bleeded out of that option. This is how you I'm gonna shorten up the strikes. I just want you guys to understand. Let's do 10 strikes. Let's clear this out. Let's do it like this because I want you to be able to see. I'm gonna open both of them up. Right? You generally want to roll for a credit. So by that time, I think I can go out a little bit further. I'm just trying to make sure they both are on the screen. Here we go. So if I were to sell the 605, right, and that's the 38 delta, by the time that gets down to 22 days, that same option, here's the 32 delta, is now worth 471, where it was worth 698 here. So you can see as time moved on, the value decreased. You got theta decay. Now you could either close it out. I would recommend at that point closing it out because you've made. Now remember, when you sell an option, you collect this. You got to buy it back. So you'd be buying back this 38 delta. Let's say you bought it back at 38 delta for 471. That would be a difference of 220 something dollars. So you made money on that trade. I was taught to close that out because anytime you get to 21 days, you can then reestablish the position. Now let's look at it like this. Let's say you have this option. Let's say you're close to end the money, right? You're at 22 days and you're here, 49 delta. Option is worth 728. You were wrong. You know, you probably down money and you want to get more time. So you want to roll further out in time. What you would do is buy this back, come out here and roll to a similar delta. So let's say you could roll out to 49 delta. You would be picking up. See, it's right here. It's worth 728. So if you bought this back, closed it out, basically, and then sold this and did it all as one transaction, you would pick up to the difference between 1061 and 728. What's that? $342 to $32, 33, something like that. 333. Let's just call it, make the math easy, 300 bucks. So you'd pick up $3 more in credit, right? You'd be getting more time. You still be closer at the money, but if the market were to turn and go down, you could make more money. You're getting more time. You're collecting more credits. You never want to roll for a debit where you got to pay money. If you got to roll for a debit, you try not to do that. And one of the ways to avoid doing that is not allowing options that you sold to go in the money. Once they get there close, they're on the dance floor right there at the money. That's when when you get into the trade, you need to know in your mind whether you're going to roll or you're just going to accept the loss. Buying options, if for me, it's no reason to hold a deep in the money call. Like if it's out of the money, you're going and you try to roll a call option that's out of the money that you bought, you're going to lose money because this particular call option, let's say you wanted more time. All right, you own this one, but you want to get some more time because you're like, hey, I think it can get to, let's call it 600. I think the spot can get to 600, but it ain't there yet, and I only got 22 days, and I want to get some more time. So you come out and roll this out to 600, right? Look how much you got to pay because it's 566. You're gonna pay another almost $400 just to get some more time. I would say just take this loss, close this out, and try to reestablish a position out here. Maybe another type trade. Rolling allows you to get more time, but you don't want to pay for the time. When you roll, you want to be rolling for even money or either a credit. You want to be picking up credits and not buying the time. You don't want to buy the time. And that's all it is. Rolling options is just getting more time for you to be right. And most of the time, if you're right, take the profit. I wouldn't. If you're it's almost one of those things where like if you own a call and it's deep in the money, let's say you own a call, let's close this up. Let's show all strikes. You bought a call out of the money and the market went your way. And now your call is in the money. Let's say your call is here, right? And um you bought it down here, you made a grand, now it's in the money. And you like, man, let's go shorter today. Let's go like right around 8 days. Let's say you up here. Right, and you're in the money with this call. Take the profit because at this point it's just going to decay on you really really fast. Anytime you get under 21 days, the time decay kind of like it starts moving faster. And so options that you have bought are going to decay really fast. I hope that you guys, this is making sense. When you're rolling out in time, especially for selling options, buying options, you need to be right. And if you're right, take the profit. If you're wrong, I still believe in cutting the losses on options that you buy. When you sell options, you can come out here and sell out of the money. Like if I sold an option right now for triple Qs, because I do think that the Qs are gonna go down. I will come out here and maybe sell the 16 delta, right? Let's make it easy. I'm come out one standard deviation, sell this 13 delta for let's call it $200, and then the market goes against me. I can look and see if I did analysis on this to see how much but if the market was to go against me and I'm down money, and it hasn't gotten to me yet, I could just sit and just hold this because the market will be, or I could buy it back and then roll out in time and pick up more credit. You roll back out in time, here go to 13 delta. I could take in 259 as opposed to up here, it was only 195. So I'll be picking up $50 credit and I'll be giving myself more time. You want to roll for credits or even money if you're going to roll. And maybe I'll try to find a position to do that on. We'll see what it looks like tomorrow. Because tomorrow, something that I can honestly see myself doing, right? Because we gapped up here. The market goes up here and hit this 519 level. And then I come in here, probably sell like a call spread, something like that. Sell the one like 26 delta about a 21. And since the market is stretched out, this is where I want to be, right? Waiting on that down move to come. And then, of course, like I said, if it gets all the way down to around 21 days and it still hasn't, then I'll look to roll out in time and buy myself some more time. Come down further down the option chain, and then you're going to pick up credits as you roll out in time. If you're rolling, the key is, especially when selling options, making sure you don't want these options to get in the money when you're selling them. You want to, once it gets there at the money, 50 delta, 50, even 51, 52 delta, right around in there, you got to have made up in your mind that if you want to roll, you need to go ahead and roll it. Roll it. You got to know when you're getting into the trade, am I a roller or am I a closer? Hit that like button, guys. Hit the subscribe button. Hopefully you got something out of this.